Hey, what's up? This is Greg Helbeck. Welcome to this week's REI lesson. And on this lesson, I'm going to teach you what makes a good rental, at least in my opinion. What do I look for when I'm buying a rental property? Ironically, I'm actually going to look at a rental property in 2 hours from now in New Windsor, New York, from a good old wholesaler. So on that note, if you are a wholesaler or you are an investor and you're in the Hudson Valley or you're in Delaware and you want to either JV with me and you want to wholesale together, because I do that, or I'm really in the market for more rentals. So if you're looking if you're a wholesaler and you want to sell me a property, just send me an email, greg@velocityhousebuyers.com. I want to buy some more properties. So with all that being said, today is going to be about what do I look for in a rental. So at the end of the day, there's a couple things I look for, and I'm going to explain them right now. So the first thing I look for is I want to get at least a 11% cash on cash return, which means that when I invest all of the money, and let's just say I'm paying cash for the property, let's say it's a condo or something and it's cheaper, even though they're still expensive, I want to get at least an 11% cash on cash return. That just means what that means in English is basically if I have X amount of dollars of my own money invested, whether that's my own money on the whole deal, or if I refinance and I have to leave some money in the deal, I want to get at least an 11% return on the personal money I have invested in the deal. That's all that means. So cash on cash return just means you're getting a certain return on the actual money you have invested in the deal, not the bank's money. So first thing I look for is I want to get a cash on cash return that's at least 11% or higher, right? Generally, I can find those on cheaper properties. That's just the way it is. So that's the first thing. I look for at least an 11% cash on cash return. The second thing, I need to buy the property at a reasonable discount. So I need to buy the property at bare bones minimum 75% of value minus whatever repairs would be. The lower the better, right? I bought them at 40, I bought them at 50, I bought them at 60, I bought them at 70, but I need a minimum 75% minimum 25% discount. Hopefully more, right? So if a property is worth 100, I need to buy that property for at least $75,000. That's assuming it has no repairs. Let's say the property is worth 100 and it needs $20,000 of repairs. I would need to buy that property for 55 grand because I'm taking the 75% of the 100 minus the 20 grand takes me to 55 grand. So basically, I need to buy the property at a discount. And why do I, number one, look for a high cash on cash return, and number two, look for the property discount? Because at the end of the day, if I'm not getting at least an 11% cash on cash return on that property, I'd rather have my money in another investment asset, whether that's flipping a property, whether that's putting money into marketing to grow the wholesale business. But I look for 11% cash on cash return. It's hard to find that in the stock market. Real estate, you got the depreciation, you got all that stuff. So at the end of the day, I feel like 11% is reasonable for me, if not higher. So that's number one, because I think that's a very healthy return, given the real estate is minimal risk. Obviously, there's risk in anything, but reasonable risk in real estate. And then why do I buy at a discount? The reason I buy at a discount is, number one, I want to get a good deal and have built-in equity. Key there to remember is I want built-in equity. I want equity off the bat. I want equity the second I close, not months down the line or years down the line. And number two, the reason I need to buy at a discount is if I'm going to refinance that property, the bank's generally going to give me 75% loan to value, if not lower. So if I buy the property at 85 cents on the dollar and the bank's only going to give me 75 cents on the dollar, I'm going to have at least 10% of that value of my own money left in the deal, plus closing costs, plus repairs. So if I want to refinance, the reason I need to get it at a discount is because the bank's only going to give me about 75% loan to value max. So if I want to have minimal money in the deal and get a high cash on cash return, I want to get, 75% loan to value and go from there. So I hope this made sense. I kind of spoke a little gibberish rental language here. So if this was confusing, let me know and I can explain, further what I meant. If you're confused on some of the terms I looked up or I mentioned, go Google cash on cash return. You can kind of read about that. So hopefully you got value from this. This is exactly what I look for in a rental, or the two things I look for in a rental. Hopefully this was helpful. And if you if you get value from this video, if you could subscribe to my channel and like the video, it would mean a lot to me. And if you're interested in doing some coaching with me, you can just send me an email, greg@velocityhousebuyers.com. And like I said in the beginning of the video, if you want to sell me properties or JV with me, send me an email, greg@velocityhousebuyers.com. Remember, you got to be in the Hudson Valley or in Delaware. Those are the areas I operate in. So I'll talk to you soon. Hope you have a good day.